Good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 203 for Monday, 10th of November, 2025. I hope you're all well. Hope you've had a good weekend and are ready for another interesting week in markets. It'd be good to know for those of you just joining us in the room that to confirm that you can hear my voice and that you can see the slides. I appreciate there'll also be people watching this on the live stream. You're all very welcome. Great to have you here. For those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can over the next half an hour, taking a look at strength and weakness within FX indices and commodities market, looking at a few charts of interest that you might want to add to your watch list, and then taking a look at the live markets. It is not a signal service. It's not a trade recommendation service. It is just me sharing what I'm looking at, which might be of relevance or of interest to yourself as well. As always, you are very welcome here, okay? But just remember that you are always responsible for your own trading decisions. If you do want a bit more sort of active trading support or help, or to join a little bit of a rebellion, the OS trading project kicks off Wednesday morning, okay, at 7:45, trading GBP and FTSE. Whole idea being to basically channel people's frustration with the current state of affairs in the UK, sort of just channel that into basically some discipline, focus, and strategy that you can utilize to trade UK markets. Okay, if you want any more information on that, just ping me, or if you want to join it, there's a link there, and I'll put a link in the chat box as well, and you can take it from there. Okay, let us take a look at what we're here for, which is the kind of Monday market update. I appreciate if you're new to trading or if you're new to joining us, this might be a little bit overwhelming or intimidating. But all it is it's pieces from my own weekend analysis. So every weekend I do analysis looking to identify where's the strength and where's the weakness, where's the trend, where's the momentum within the FX indices and commodities markets, so that as a swing trader, that allows me to basically make the best use of my time, energy, and resources for the week ahead. So, what is this telling us? How can we utilize it? Well, here we are. We are into week 46 of the year already for the 10th of November. Where's the strength? Where is the weakness? Well, we see Swiss franc, okay, still remains top of the pile, as it has done for the last few months. Euro had a little bit of a bump there, okay, up to a second place from last week, dropping. Part of that is just to do with Aussie kind of sort of gave up some of those gains. That's an element of, I think that's probably more to do with kind of risk on, risk off, risk on, risk off giddiness, okay, based upon the sort of ongoing saga of the US-China tariff deals. And also an element of that in terms of the US government shutdown, which it looks like we are coming to the sort of end of. So I'm expecting a little bit of risk on giddiness at the start of this week, at the start of this session. And basically, if I look here at the sort of how markets have opened in the last sort of 18 hours or so, well, with Aussie, Kiwi, CAD, Sterling, okay, strong, and Swiss franc and Japanese yen weak, okay, on the short term, this morning's buys, that gives me that there is a bit of a risk on giddiness going on there as we get as people get excited about the likelihood of the sort of US government shutdown coming to a close, but also B, a resolution or progress in those tariff talks between the US and China. And so, whilst, as I said, whilst I did at the weekend, Aussie dropped, it might be that picture might differ by the end of this particular week. What has been interested in is US dollars moved up to third place, and we'll look at the dollar index at the moment. The dollar index has hit 100 last week. Nice, big round number. Okay, we talked about this over the last few weeks. We'll look at it again in the chart in a moment, but I'm kind of always curious to see whether, if we do get a bit of risk on giddiness, does that sort of take the wind out of the sails of the sort of the recent dollar strength? But we'll look at that on the charts. Close to home, sterling. Okay, sterling remains in sixth place. Okay, it is kind of from here, sort of back in September, August, where it's kind of near the top of the pile. it has over these last few weeks and months just started to slide down the rankings. All right, and that shouldn't really come as a shock to people. I go on about it every week. We have got what is it, 16 days till the budget, and invariably what we're seeing is Rachel Reeves and her team are putting an awful lot of scaremongering out there, okay, in terms of what they're going to look to do. I suspect this is just that kind of old, well-worn political strategy of putting the cat amongst the pigeons, all right, and then invariably what will happen is they'll row back a little bit on that, saying that they've taken into account the sort of feedback from the people, and everybody will just be happy that the taxes aren't as bad as people are talking about, but they are still increasing taxes. So all of that is weighing on sentiment. All of that is weighing on sterling. And as I said, from Wednesday morning, I'm going to sort of just do a few, I think 9 live sessions in the mornings with Tuesday, Wednesday, Thursdays to just help educate people a little bit about how you can turn this kind of volatility into opportunity for yourselves. And so if you want to join, you're very, very welcome. But yeah, sterling's weak, and still remaining kind of bottom of the pile. We've got Japanese yen and Kiwi dollar. They are still sort of, they're still floundering, shall we say. When I look across at the indices and commodities, well, what we've seen is the momentum has all turned a bit bearish. The Russell has even turned tactical bearish, as has the DAX. We'll look at them in a moment. Will we get a kind of a little bit of, as I say, risk on giddiness for the first part of this week, as that basically government shutdown and progression on tariff talks makes some difference? I suspect that's probably likely. I think it'll be an interesting session today. Remember, tomorrow is Veterans Day in the US, so it's a bank holiday for them. It should be for us in the UK, but anyway, let's not get me started on that. But in the meantime, I suspect we'll have a bit of giddiness there at the start to today, and then we will sort of see how that plays out for the rest of the week. Certainly, there was a little bit of wariness last week, maybe is the kind of last couple of words. We had some of the big boys providing some of their earnings. We've got a couple of interesting earnings this week. Not really nobody I'd really call massive players these days, but it's a pretty full earnings schedule, and that might have an opportunity to sort of basically send in a few surprises. But certainly at the end of last week, what we saw was a kind of a bearishness across the sort of major global indices, which we'll look at in a moment, just to sort of give you a bit of insight into what's going on and what we could maybe look at experiencing in the next few days. Certainly, when we look at a couple of the other indices, commodities, Aussie, also the ASX already sort of tactically bearish. Gold, okay, they're out of STAM, but the price action is quite interesting, which we'll look at. Listen, Bitcoin is here. It was looking at as a strategic sell. That was because when I did the analysis on Saturday morning, we were looking at being beneath the weekly 50, but as you'll see from the charts in a moment, we bounced off that kind of 50-period moving average and 100 big round number, which we'll look at in a moment. So it's merely a tactical short, but as I said, that kind of risk on giddiness has given it the bounce off 100, and that's what we'll look at. Certainly, the VIX was bearish, okay, but it was, even though it's bearish, it's still below the number 20. All right, really, when it comes to VIX, numbers, I'm looking, beneath 20 is relatively kind of benign. And once we start getting above 20, then above 25, then above 30, then above 35, that's when people start to get panicky a bit. But even though the price action is kind of bearish for stocks, as I said, the overall number is still benign. And I suspect, as I said, we're going to get a little bit of risk on giddiness to start the week. That's what I'd work with. Okay, so let's have a look at a few charts of interest. These are normally just weekly charts that I'm looking at as part of my own analysis, just sharing them with you. Okay, I don't consider myself an equity specialist, but listen, we're all traders, we're all investors. We all like to look at a good chart. There's always something we can learn. There's always something we can basically add to our watch list to watch. So as I said, we have a little bit of wariness, a little bit of bearishness, maybe even a little bit of panic in sort of global stock markets at the end of last week. Everyone was getting a little bit, everyone was getting a little bit wary, a little bit upset, and that was across most global indices. But there were one or two that were standout, not sort of falling for that. One of them was the ISEC. Okay, what's the ISEC? The ISEC is the Irish Stock Exchange. This is the Irish Stock Exchange on a weekly chart. We looked at this a few months back. All right, we looked at this a few months back where let's bring up the old drawing tool here, where we had effectively sort of had the kind of pre-tariff high, and we were interested to see what would actually happen when we came back. That was some real V-shaped recovery there, wasn't it? And what we're looking at is actually not massively dissimilar to the DAX in some respects. Over that kind of a period of the summer, it really just sort of went sideways around about that kind of 11,500 number, just kind of like pivoting around there. But unlike the DAX, which kind of sort of it has sort of drifted sideways lower, what you can see for yourself there is ISEC has been very much a case of a little bit of a bullish breakout there, isn't it? And it's a bullish breakout above 12,000. I was curious the other week, okay, where we literally kind of closed around 12,000. What I wanted to see was basically, did we just use it as flip the 12,000 from resistance to support? But as you can see from last week, we kind of piled our way even higher. It's almost like the ISEC is an interesting sort of kind of indicator of risk appetite within Europe. Okay, that's what it is. Almost like a kind of a bit of a regional sentiment gauge. When people are getting a little bit risk on, they'll plow into the ISA. When people are a little bit risk off, they will plow in elsewhere. And maybe that's partly, the ISEC there's an awful lot of sort of kind of banking, building, construction build up, all right. So read into that what you will, but certainly the chart isn't lying. The chart is basically above 12,000 and still continuing to move higher. So definitely want to add to your watch list and watch to see how that plays out. Here's another one. Okay, for us, this is a little bit different for us. This is Redcat Holdings, RCAT. Okay, weekly chart. Who are they? Why would you be of interest to them? So Redcat, I have watched for a while. Okay, they are a very US small cap, right? That specialize in unmanned aerial systems for defense and commercial usage. And they provide FPV and reconnaissance drones to the US Department of Defense. So, what we have seen is that basically the world and his wife is getting excited about, not only the upside potential from drones, but also whether in Mr. Hesketh and his new direction for the Pentagon and Department of Defense, whether that's going to include new sort of Department of Defense drone procurement initiatives based off the back of what's been going on in the Ukraine conflict and also in the Middle East, and also with basically the sort of moves across NATO and other, let's say, Western governments. And so, of course, traders and investors are interested in companies that are at the forefront or are certainly involved in that. Now, as I said, this is a weekly chart of Redcat, and as you can see, it has been a rather volatile kind of last year. Okay, so let's bring up the old drawing tool here. We were nicely drifting our way up to around about from about $1 to $3, and then everybody gets excited, and we can see that we jumped from around about the $4 mark up to around about this $15 mark here. Okay, $15, literally, shot our way up, but then also came all the way back down. A really nice big bearish, bearish key reversal candle there, engulfing candle. And what happened is, and this is where I start to get interested, is we've come back, okay, to the 50 period moving average, and actually opportunities to buy in around the sort of $5 to $6 mark, okay, as prices found support at that 50 period moving average. And then we moved our way back up to 10, big round number there. So I've got it drawn in there. Once again, okay, as we have seen basically a little bit of excitement in Europe, okay, over the, let's say, incursions by Russian drones. That gets everybody excited. And then invariably we saw once again price bounce its way up or roar its way up to that sort of $15, $16 mark. But once again, and pretty much like most of those defense companies, we have seen them sort of tail off there. And now what I see in where we are, last week we closed beneath $10, and we bounced off that 50. We came back down to test it, and so I'm starting to get interested. Is this a case that they've got their earnings on Thursday? Okay, will those numbers be good? Would those numbers provide support from $10 and the 50 and race us back higher? Or are there any kind of dodgy numbers or dubious goings on, that could effectively provide a bit of a rug pull on Redcat. In which case, $10 turns from being, it turns from being support to resistance, and we slice through that 50, which we have not which we've not been below for some time. So it's going to be an interesting week for Redcat. And as I said, you might want to add that just to your watch list to see how that particularly plays out. And another interesting company that haven't talked about much before either is Oklo. Oklo, who are they? What are they? American company, developer of kind of advanced nuclear microreactors and kind of fuel recycling facilities. Okay, I don't claim to be a nuclear expert in any way whatsoever, but they are at the forefront at, as I say, developing those kind of sort of nuclear microreactors that will enable the US to basically supply baseload energy for AI data centers. Everybody's excited about AI, but nobody's looking at really at how much energy that is required to run those AI on those data centers. But also, the US Department of Defense is becoming interested in having these small microreactors that they can literally, load up on a couple of trucks, put in the back of a C-17 Globemaster, fly them somewhere, roll them out, and then suddenly that airbase has got lots of available energy. So I think it's a fascinating opportunity. I have for years watched Rolls-Royce with their kind of their SMR programs, okay, which I have great faith in. Great faith that is invariably being destroyed by the incumbent government and their kind of lethargy and red tape and lack of action. That shouldn't really surprise us. Anyone who has seen the way the British government deals with opportunities to lead the world in technology. That is invariably we have a terrible government, has an absolutely terrible sort of history with that. So as part of this, I started to get interested in what other opportunities, if Rolls-Royce are going to get prevented from doing anything exciting by the government, where else is the opportunity? And Oklo was actually a really very it was a kind of a weird bluebird. All right, it was a lucky strike for me. Because I basically saw a piece on the news, just looking at market news, and invariably Oklo had won a contract from, I think it might be Department of Defense, might be Department of Energy, and to create what they call, I think it's their Aurora Powerhouse program, and they are basically rolling out the first of these the nuclear power and fuel recycling facilities at a place called Eielson Air Force Base in Alaska. And that's what caught my name, because I spent a week there in 1997 when I was in the RAF, as part of spending a summer in Alaska as part of, I think they call it Red Flag Alaska these days, bigger program. And I spent a week on Eielson Air Force Base. Okay, it's just outside Fairbanks in the middle of Alaska, and that's actually what caught my attention. And when I started to look into it, I realised, actually, hang on a minute, these lads are of interest. So, in the interest of full disclosure, I do have positions in Oklo. Where I started to get interested is once again back here, kind of April time, all right, sort of 20, I think it's about $23 or so, when price came back to the 50-period moving average. Right, we had a really ravage run up to $50, come back down, and then it's worked its way up there, and a bit like Redcat we looked at as well. We just had, that is very much kind of a grand old Duke of York. Okay, price marched itself up to the top of the hill, just tickling the soft underbelly of $200. And then, as you can see, over the last couple of weeks, all right, it is just absolutely plummeted down. And here we are at $100 and the 20-period moving average, which we kind of crossed back in sort of May time. So, of course, Oklo, they have also got earnings this week. So I'm kind of curious. Once again, are earnings going to be the catalyst that basically, if we get good ideas, good numbers, it turns 100 into support before a next move up? Or is it bad numbers that basically slices us through 100, slices us through the 20? And then I'd say you're looking really kind of around about that sort of $70 mark. So it's going to be an interesting week for those kind of companies, small speculative companies, as I said, but fascinating in terms of technology. Hence why it's basically of interest to me. And you might want to watch this yourself this week. Cool. So there you go. So there's a few charts of interest that you can add to your watch list that you can take away. Let us switch across to the live markets now. So if you just bear with me for a second, let's switch across to the charts, see what's going on, and we'll take it from there. So just bear with me one moment, ladies and gentlemen. Okay, so I'm hoping that you can still hear me. I'm hoping that you can see me. What have I got here? This is kind of my usual sort of indices starting point where I'm looking at. Okay, so indices here. So what have I got here? Dow on the weekly, Nasdaq on the weekly, S&P 500 on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei on the weekly, DAX on the weekly, oil on the weekly. Oil, it's still pivoting around $60. That's what I see there. Okay, so I was kind of curious to see if we'd got after we'd had this kind of big bullish engulfing key reversal candle, would it be kind of pull back to 60 and launch itself higher? But so far, not really. It was kind of it's not really followed through in that. But I'm kind of more intrigued in the indices. So last the week before last, we talked about how we'd had a little bit of a pin bar there, okay, a rejection candle, and we followed it through last week with a little bit of a sell-off. Same with Nasdaq, same with S&P 500. Russell price action wasn't as pretty, but we did follow through there, and that's why I was saying earlier that people were a little bit wary, a little bit sort of a little bit down, a little bit sort of starting to get a bit panicky. Okay, that perhaps everything was not good, but as I said, the kind of progress on the US-China talks, the looks like high probability that the sort of US government shutdown is coming to an end. So all of these things might sort of provide a little bit, as I said, a little bit of kind of risk on giddiness. Certainly for today. If we looked at, let's say, Russell, let's go down a bit. Let's have a little look at the daily chart. Yeah, sort of kind of what I was curious about is on the daily chart. Okay, and the Russell, we kind of double topped there, really nice double topped, fell away from it, got beneath the 50, and we've been pivoting around there. And as I said, Friday, we can see we pushed lower, but we came back, and it looks like gapping up and a little bit of, as I said, a little bit of risk on giddiness. The question I've got is, is that just going to be is that the start of of a next leg move up towards back towards those highs, or is it just a little bit of a relief rally that kind of runs out of steam later on this week? Okay, if I'm honest, I don't have the answer to that right here now. Hence why I will just look at the charts and watch the watch the news flow, watch the order flow, and watch the kind of sentiment to see whether those kind of two big things will push us higher, or whether there will be whether it'll run out of steam, and that is clearly happening across all those other major US indices. A bit closer to home, we looked at ISEC, didn't we? All right, and talked about how ISEC had spent like the DAX here on the weekly chart, spent most of the summer just going sideways, but ISEC had broken out and gone higher, whereas DAX had kind of failed. It was a false breakout, okay, and we were actually kind of trickling a little bit lower there, okay, and that's where we were there. And with that, the daily chart as well, kind of that was a really nice false breakout there, right? False breakout, which turned into a very strong evening star rejection formation. We just worked our way back down to the 200 period moving average. Once again, bounced off it, not as strong as the American indexes, but that's not a massive surprise. But we'll watch to see whether does it have what it takes to get above that 50 period moving average, all right, or does it run out of steam as well? Look at the UK FTSE. Listen, on the weekly chart, all right, that kind of weakness in sterling is helping FTSE 100 companies. We are still, some people might say, well, Paul, that weekly candle, is that not like a hanging man sort of there? Yeah, you could see that, but it is about how price follows through. Okay, it is about how price follows through, and that will be the kind of the interesting thing for us. Certainly, that kind of daily chart. I would look at this here. This, we're kind of an intriguing. We had this fantastic bounce and run from the 50 period moving average. We basically double topped ourselves there, but we are basically supporting ourselves. Okay, does it have what it takes to kind of continue higher? All right, does it have continue higher, or is this just sort of going to flatter to deceive with a false breakout? I would think this is going to be an interesting week. Okay, we've got some UK data this week coming out. Okay, tomorrow, Wednesday, etc., and elsewhere. We've had already one of the Bank of England members speaking today. So I think it's going to be an interesting week for the UK. It's something it's still bullish. Weekly charts is still bullish, but I would be watching that like a hawk at the moment. If we look at a couple of the commodities, so gold, all right, gold, having rallied our way up, we kind of fell back a little bit, but we were around about that 4,000. Last week was a kind of it's a kind of bullish inside bar on the weekly chart. I was kind of talking about how, here we go. If I go into the 4-hour chart, it's probably easy. I was talking about this last week, a couple of occasions where on the 4-hour chart, we were just really, I'd say, over the last couple of weeks, excuse me, we were coiling up there, weren't we? That's the way I'd look at it on the 4-hour chart. Excuse me. And that's what I talk about, namely that when price and the moving averages are all coiled up together, that is normally the calm before the storm. And we had that around about the big round number, 4,000, and then boom, we've had that pop there, haven't we? Now, is that a pure gold play or is that a weak dollar play? That's the question you might want to ask yourself. All right, I think we'll find out more about that. But certainly, as I'm saying, when you see price coiling up like that and then tightening up with the averages, it is normally it's the calm before the storm. Sometimes that it's very clear which way it's going to go. In which case, well, good for you. Trade what you see. Sometimes it's not, in which case I will always say is, let the market play its hand, because then it will give you a second chance to get on. You're not in the job of trying to predict. You're just basically just trying to be on the right side of the market, and that's really all that matters. So that was in gold, and silver was pretty similar. Okay, pretty similar price action on the weekly. Okay, $50 there underneath it. Nice bullish inside bar pin bar, which I'm always interested in. Still, 20 acting as resistance, 50 acting as support. Go down to that 4-hour chart, just like what we were looking at on gold. Okay, sort of kind of a price kind of coiling up there. Excuse my drawing, but you get the gist. And then price coiling up with the moving averages before we get a move above 50. So that's that's it's kind of nice the way that particularly played its way out there. If we look at, as I said, at Bitcoin, with last week, if you think about that, we were a couple of, what was that, about 5 weeks or so ago, we were at highs there, 126,000. And then last week at a point we were down beneath 100, and at a point we were down beneath the 50. But of course, because of the way Bitcoin trades, all right, it basically, when I was looking at it on Saturday morning, okay, it was beneath the 50, but you can see I actually ended up closing the week back above the 50. And if we go down to the daily chart, what's interesting there is look at 100,000. There's no surprise that is a big round number. There's acting as support there. Okay, I suspect there's been an awful lot of people buying at 100. All right, and you can see with the kind of risk on giddiness, if you bought 100, well, you're up 6,000 already. Okay, so you're kind of quite happy with yourself there, right? Okay, you're quite chirpy. Certainly in that 4-hour chart, the start of the week was a really lovely run, and the smart move was to trade down towards that 100 area. That is a 4-hour double bottom. Some of you might have watched the Togs Trading podcast session on double tops, double bottoms. If not, by all means, check it out on YouTube. But that's a lovely 4-hour double bottom there, which basically started this week. And with gold and with others commodities, okay, is that a bit of a a risk on play that is also a reflection of maybe a little bit of a dollar weakness after its recent run. So let's have a look at dollar. Let's have a look at sterling. We're kind of a little bit over time here. So I've got my dollar profile here. Okay, so we've got dollar here. So Aussie dollar on the daily, Euro dollar on the daily, pound dollar on the daily, dollar Swiss on the daily, Kiwi dollar on the daily, dollar CAD, dollar yen, and then the dollar index on the weekly chart. Okay, let's always start with the weekly chart. Okay, on the dollar index, it's my kind of starting place, go-to place. Yeah, listen, double bottom there. Okay, FOMC rallied our way up, and where did we rally our way up to? Recent kind of highs, and also the big round number at 100. And then if we look at last week, we printed a bit of a rejection candle, and we started this week with a little bit of lower dollar. Look at that. That is That's cracking, cracking price action there. Okay, up to 100, hit the daily 200 period moving average, put in a nice rejection candle, false breakout of 100 before we drift away. And as I said, I don't. It's exceptionally rare for me to trade the actual dollar index, but as it's my kind of reference point to start off with when it comes to looking at the dollar majors and then also the UK pairs, or but pretty much all FX pairs. And if you can get a good idea, a good grasp on what it's doing, well, then that provides you with a great, a great reference point to work from. And if we look at that on that 4 hour chart, we get to 100, no surprise, false breakout, roll our way over, and then fall away. And 4 hour chart was still beneath the 50, 20 is coming down. Do we start to sort of just pump up into that, and then you find that as a way to roll over? That's what I'll be looking at for. But you can see that kind of dollar weakness, I think, is probably what is one of the things that has helped that sort of kind of strength we've seen in Bitcoin strength, we've seen a bit gold and silver. Look at Aussie, all right, Aussie dollar the last few days, okay. Euro last few days, okay. Sterling the last few days, okay. Swiss franc, okay, strengthened the last few days, okay. Canadian dollar strengthening the last few days, okay. Even Kiwi dollar today has risen a little bit. Even yen, I remember there at the bottom of the STAM, they've managed to sort of, sorry, not dollar yen, but the others have managed to sort of give themselves a little bit of a bump. So that kind of is the kind of risk on giddiness also an opportunity that people are just basically shorting dollar or taking their profits from what has been a very nice run on the dollar so far. All right, let us. What I want to do is to just bring up my bank. Let's bring up sterling. Just I've got so much going on here. Okay, so just bear with me 1 second, ladies and gentlemen. And this is what happens when you have hundreds of things going on. Right. Okay. Sterling. Okay. Here we are. Sterling. What have we got? Cable on the daily, Euro sterling on the daily, pound Aussie on the daily, pound CAD, pound yen, pound Swiss, pound dollar, and FTSE. Sorry, pound Kiwi dollar. Right. What's the story? Morning glory. Well, we can see that kind of. If we look at interestingly, the kind of there's a little bit of that risk on story. As I said, we've seen. If we go to the weekly chart, what we saw last week here, cable on the weekly, we came down to 130. We managed to still close above the 50. That's a 3 bar reversal there, okay. And it's a case of, is that sterling going to rise a little bit there? That's an indication of, it's the reverse of the dollar index. Is that kind of dollar weakness we're going to see? Is it a case of sterling, having sold off really strongly last week? Okay, is it a case of everyone's going to take position themselves in front of the budget? Okay, could this be a little bit of a pump before the dump? All right, that's what I'd be thinking of. That's what I'd be looking at. Certainly, if we go down to that daily chart, that is what's occurring there, and it wouldn't surprise me if we continue to sort of just, as I say, have a little bit of a pump before a dump, around the 26th. That's what my mind would be working on at the moment. Pound against yen, pound against yen, it is ground its way higher, okay, and that is when yen has been at the bottom of the pile. It is ground its way higher. But even if you look at that daily chart, it's not exactly been pretty when considering that yen is firmly stuck to the bottom, and even with that, it's a sign of sterling's weakening that it has not really been able to take advantage of that, and that is telling us a bit about that kind of sterling weakness. If we look at pound against Swiss franc on the daily chart, that has for the last few months, okay, that has been last 3 months really, that has been basically going in one direction, hasn't it? Now you might say, well, Paul, all right, maybe this is basically you had a flush there, and we've got a little bit of a double bottom there, okay, and I wouldn't fight you on that, okay, it wouldn't surprise me. I think the rumours and comments out of the Swiss National Bank, okay, they are not happy about the strength of the Swiss franc, so they will be doing what they can to alleviate that. And then also, if you've been short for a few months, all right, well, you need to find a way to take some profit, don't you? You need to close those positions. And so it's no surprise that perhaps maybe we get a little bit of a kind of a relief rally up to that sort of 106.50 at the 50 period moving average. That's what I'd be looking at. Can it get above the 20? Right, when it was here, okay, just a month ago that it was back above the 20. Okay, can it actually get above and hold it? That's what I'd be looking at sterling wise. Okay, at the moment. If we look at the sort of COMDOLs, we had sterling weakening, right, and then we've had a little bit of a bounce. We had sterling weakening, but it's had a bit of a stronger bounce against New Zealand dollar. We had sterling weakening, but then we've had a little bit of a bounce there. Okay, I wonder whether, as we get kind of maybe risk on giddiness, that kind of those com dolls start to exert themselves a little bit. And then finally, euro against sterling. Having had that, really strong rally there, we've kind of sort of the last few days, we've kind of had a little bit of euro weakness coming in there, hasn't it? A little bit of euro weakness falling away there. If I look at the 4 hour chart, I'd looked at this as, it's almost like a triple top there with a bearish key reversal, came down to the 50, it held 50, it pushed its way, and it was a real, excuse my drawing, false breakout, and we've worked our way back down. On Friday's price action there, that's a really lovely evening star, and we're kind of working our way down there. And so that is an indication of there's a little bit of euro weakness and a sliver of sterling strength. But as I said, maybe it's the sterling just getting the pump before the dump. That's where we might well find ourselves. All right, ladies and gentlemen, let's draw it to a close there. Okay, I hope you found that useful. I hope that's given you some help and insights. As always, okay, I wish you the best of success in your own trading, ladies and gentlemen. If you want to join the Sterling Trading Project this week, just drop me a note. You'd be welcome to. Other than that, I hope you all have a fantastic trading week, and I will speak to you soon. Take care and trade well, everybody. Cheers.